Okay. Okay. I think everything is set. All right. Good morning once again, and I want to officially welcome everyone on the call to the 2026 SUBA Capital Conference. This is a conference that we set aside every year, targeted towards small business owners, um, yes, small business owners, smallholder farmers, and young entrepreneurs and also young professionals with the aim of equipping them with knowledge, talking about relevant topics that we believe can help improve their business. So one of the things that we believe in Super Capital is that aside having access, aside having loans, aside having a business, having the knowledge to be able to sustain and grow that business is one thing that is one gap that is really lacking in the African ecosystem. And we are bridging that by providing knowledge through our webinars, through our conferences, building a community where we can all grow together. Because there's this saying that if you want to go far, you go alone. If you want to go fast, you go alone. But if you want to go far, you go in a group. So when you are weak, you have someone that can also support you, and that is one of the core arms of the Super Capital. So to kick things off, we'll be inviting the co-founder of Super Capital in person of Miss Adako for her open address. Miss Adako, you have the floor.
Good morning, everybody. Please confirm that you can hear me.
Yes, we can hear you.
Okay, so distinguished guests, partners, members of the cooperative movement, entrepreneurs, young professionals, ladies and gentlemen, good morning and welcome to SUBACON 26. It is an honor to be before you today as we gather to celebrate a timeless idea with a modern purpose, building resilient wealth through cooperation. Growing up, many of us watched our parents build remarkable lives through what many simply called meeting groups, Ajo, Esusu, thrift collection, and cooperative society. Those communities paid school fees, they built family homes, they purchased land, they expanded businesses, they helped families survive difficult seasons. Yet, somewhere along the line, many of us dismissed these systems. We laughed because our parents did not drive the biggest cars. We questioned why they had to go to meetings monthly before they could access money during urgent family needs. We believed we were more educated, more sophisticated, and better equipped for the future. In our pursuit of modernity, many of us abandoned one of the most powerful financial systems that helped raise us. Today, many of us have reached at the age our parents were when they already owned homes, raised children, and had thriving businesses. Yet, we often find ourselves blaming the economy, the government, inflation, or everyone else except one uncomfortable truth: we abandon the power of communities. What many of us fail to recognize is that what our parents achieved in 5 years, what might have taken 20 years alone, because they pooled scarce resources together. They understood something that we are only beginning to rediscover: community multiplies opportunities. Yes, the traditional agile and institutional systems were not perfect. There were cases of fraud. There were individuals who took advantage of trust. But despite those imperfections, our parents never abandoned cooperative entirely because they knew something the financial system still struggles to provide, that no bank lends with the flexibility of a trusted cooperative. No bank accepts trust in itself as a collateral. And surely no bank can always move with the speed of a community determined to help one of its own. The answer was never to throw away the entire ecosystem because some people abused it. Instead, the answer is to build better systems that preserve trust while strengthening accountability through technology, governance, and transparency. That, ladies and gentlemen, is why we are here today. At SUBA Capital, we believe the future of work creation in Africa will not be built by individuals working in isolation. It will be built by communities. It will be built by cooperatives. It will be built by people saving together, investing together, accessing affordable capital together, and creating opportunities together. This year's theme, Resilient Wealth, Building Inclusive Prosperity Through Cooperation, is more than a conference theme. It is a call to action. It is an invitation to rediscover old wisdom through modern methods. It is a reminder that wealth is more resilient when it is built within a community. As we celebrate the International Day of Cooperatives, I want to challenge every young person, every entrepreneur, every professional, and every business owner. Rethink community, rethink cooperation, rethink the way we build wealth. The future may not be powered by technology alone, but it will always belong to the people who know how to work together. At SUBA Capital, this belief is reflected in every product that we build, creating opportunities for people to save, invest, and accept capital together while preserving the spirit of cooperation that has sustained generations before us. I hope that over the next 2 days, you will leave not only inspired, but equipped to become part of a movement that is rebuilding community wealth for a new generation. Together, let us embrace cooperation. Let us build resilient wealth. Together, let us create inclusive prosperity that lasts for generations. Once again, I warmly welcome you to SUBACON 26. Thank you, and I wish you all a productive and impactful conference.
All right, Adaku, thank you very much. Please confirm you can hear me.
Yes, we can hear you.
Okay. So thank you for that introduction. And I believe what you have said is all encompassing because it covers everything that both SUBA Capital is about and what the conference aims to educate. So without wasting much of our time, we have a very interesting lineup for us today. And I believe that everyone who has come in here today would most definitely be going with something because, as I said when we started, the whole concept of the webinar is geared towards Sorry about that. So the whole concept of the webinar is geared towards the mindset of equipping small business owners and young entrepreneurs to be able to. Please confirm you can hear me.
Yes, we can.
Yes, we can. Carry on.
Please confirm. All right. All right. Thank you. So as we said, the conference is a avenue to gather like minds, gather individuals who have the same struggles, have the same challenges, who are facing the same thing, who are having the same experience within the same ecosystem, and see how we can all build together, how we can all elevate one another. Because the one thing I feel, especially in the Africa ecosystem, we neglect is the power of collaboration. Because collaboration is how most of the first world countries have been able to build themselves. Because I have this particular skill, I'm skilled in this area. I collaborate with somebody who is skilled in another area, and I focus here, he focuses here, and together with that collaboration, we are able to build what we all, or we're able to reach to that particular goal we are aiming for. So without much being said, we'll be calling on our first speaker, who will be taking on the fintech session in person of Mr. Silas. He will be talking to us in a couple of minutes, and I will encourage that we all put in our minds, open our minds rather, and then be able to accommodate and assimilate all that he's going to be sharing with us this morning. So, Mr. Silas, the floor is yours.
Thank you very much, Sam. Thank you, Adaku. That was such a powerful opening. I don't know how anybody else can match that. Um, so I believe that for those watching us live, for those live on Zoom, live on YouTube, for those that don't know, we're also live on YouTube. For those that are going to watch the replay, I believe that we're going to leave these 2 days with a lot of value, and we should be able to impact the message of financial inclusion and wealth creation across Africa, as we intend to do over the next coming years. My name is Silas Ozoya, and I am privileged to serve as the founder and CEO at SUBA Capital. Just before I go into what I'm going to talk about today, a quick background. This conference actually predates the company SUBA Capital. Is very interesting. I was just thinking about it this morning before I came on, and I was smiling. We've been doing this every year, July, not quite July, but mostly every year since 2014. And it has taken different shapes, different sizes. We've gone from hosting in university campuses to hosting off campuses, and then hosting in different cities, and then going virtual um, by virtue of COVID in 2020. And, we've stayed virtual ever since. Today, I'm going to be talking about digitizing grassroots trust by, leveraging several digital channels, as Adako has introduced us to earlier. And I would have loved to tell you that I have everything off the top of my head, but I have some notes down. So you might want to get a pen and paper yourself, or pen and a jotter writing pad, and be able to take some notes down as well. So what we know, as it has been described in the opening message earlier today, is largely from what we know about how our parents raised us and how they managed to um, get money to be able to raise us. Just a minute, please. Okay, I think the host is back. So many of us are not strangers to the Ajo, Osusu, Esusu, whatever name it is called in Nigeria, across Africa. The culture around um, community finance or cooperative finance has been the same, and it predates even the modern banking system. However, technology has changed, development has happened, things have moved, and even the barter system that started means of exchange was built on trust. And that's what we're going to be talking about today. So we're going to be talking about digitizing grassroots trust by leveraging some of these digital channels, mobile app, QR code, and all of that. I'll just share some of my experiences and how we came to the conclusion that this is going to be the future or the solution to financial exclusion in Nigeria and indeed across Africa, maybe even the diaspora. Couple of years ago, my mom and her friends, people that are of their age range, they at the end of every year, they will kill an entire cow as part of what they have as extra from their savings. They will share profit and capital in the millions. My mom is obviously not a baby, and the best technology these women can operate is WhatsApp, or according to them, WhatsApp. And it is amazing how these people who the only thing they can really, really operate is very basic technology, right? And they are able to pull that amount of resources together. Then come to us who are using more sophisticated technology. And that's how the idea of leveraging technology to then solve the problem of financial exclusion came about. So, where do we start? The first thing is trust. How do we move from cash to digital platforms and still retain that particular trust? Community finance has to move away from paper and book and booklets to digital platforms that people can access on their smart devices, on their desktop, on their PCs, because for a lot of reasons, right? Some scenarios are scenarios where the collector has a record and the contributor has a different record. Because there is a mismatch, sometimes it's just human error. Possibly the collector collected the contribution at that point and didn't quite record it, or the contributor gave money to the collector and didn't quite record it. So all of those paper documentation becomes a problem. And because it is purely just cash transaction, the collector is exposed to risk of being attacked and being robbed, which then has a negative effect on all of the people who are contributing into that particular pool. So that trust between the collector and the contributors in this community system of, raising money should then move away from paper and biro and pen onto a much more better digital system. And that's what we're talking about today. So we have to then be able to facilitate and build technology that makes that possible without losing the trust. The second thing I'm going to be talking about here is the use of that technology. Technology should not replace human relationship. It should strengthen them. Just like social media, in its case, strengthens social interaction, that people halfway across the world become friends. In fact, more than 50% of marriages that happen today started on digital platforms, and which is one of the most important aspect of human relationship. So if that could happen, if people can trust people they randomly meet online to the point of spending their lives with them as partner and spouses, why can't we take our cooperative and traditional and community financial system onto these digital platforms as well? Leverage them to be able to strengthen our financial and wealth creation. The third thing is building inclusion through trust. A lot of fintechs in the last 10 to 15 years have said, well, they want to bank the unbanked. They want to reach the financially excluded. Well, in the case of Africa, I'm going to speak from where I know. In the case of Africa, especially Nigeria, given that about 6 or 7 out of the 10 unicorns in Africa are from Nigeria. Most of them just have large offices in Lagos, and not even mainland Lagos, maybe on the island. And then there's a Yarisika somewhere down the street, in Ikorodu, who really has not been reached. There is a woman in Bayelsa who sells fish by the river who has not been reached. And then there are the people in the north who, for the most part, do not even have coverage. How do we reach these people? How do we leverage technology to then include these people into the financial and economic activity that is going on? So the point here is, how do we leverage technology to drive inclusion? I had a very good experience when I visited Kigali last year with regards to financial inclusion. There was barely cash on the street. Nearly everyone just wants to do mobile money. From the guys that were riding bikes to the taxi drivers to the restaurant operators, nearly every single one, just by simply having a phone number and what we consider touchlight phone, could participate in the economic activity of the country. That's what inclusion looks like. You don't need internet penetration alone. If that happens, that's fantastic. It makes it better. However, USSD technology can drive inclusion. Simple QR code technology can drive inclusion. These are technology that we are building at SUBA Capital and deploying to our community to be able to drive inclusion for people to participate in the economic activities that is happening within and around them. And I dare say that if we wait for the traditional banking or finance system to be able to do this, we might wait for a long time. I don't know how far or how recent the CBN data looks now, but as of my last check, more than 80 million people in Nigeria alone are financially excluded. More than 100 million are financially fragile. That is just Nigeria. Across Africa, we're talking somewhere around 350 million or more. And if we consider Africa as the future, the economic future of the world, then we should start thinking in that direction, not just by building solutions, but by also participating in communities like SUBA Capital, right? When we start to participate, it then strengthens the resolve to say this is a solution that would actually work. So millions of Africans remain underserved by this. Millions of Africans remain underserved by this traditional system. But when we continue to build and leverage trust-based digital platforms like what we have at SUBA Capital, it will increase access to savings in a pool. It is going to expand access to credit. It's going to expand access to insurance. It's going to expand access to investment opportunities. And this is both for individuals and for SMEs alike, because SMEs are obviously the heart and the core of economic growth. The fourth thing in this conversation is transparency. Remember when I mentioned in the first point I made earlier, why we really needed to move from pen and paper and cash to digital platforms. is to drive that transparency. Like I said earlier, one of the biggest flaw of the current community or cooperative finance system is the fact that human error could occur and there is no transparency or no log to check whether what we are doing is right, what we are doing is correct, or to correct any mistakes that have been made. With digital platforms, we are able to drive that transparent transaction because every transaction has a log. Every transaction has a record. You know what you gave or deposited into the pool as a contributor. The collector can see exactly what they collected, and the system automatically calculates the returns that goes to everyone that participates in that system or in that structure. And that's the message we are bringing here. Because once there is real-time record and there are digital receipts, governance becomes easier. Enforcing governance becomes easier. It reduces fraud. It helps with clear reporting. It improves accountability, and it encourages greater participation. And this is not just for members alone, even for third parties that want to look into the system from outside to ask questions or to audit. So that transparency that these digital platforms create is one of the core reasons why at SUBA Capital we preach the use and the leveraging of technology to be able to drive financial inclusion. Finally, I would just build on what Adaku said earlier in her opening remark or in her opening speech. The future of finance is community-powered digital finance. Just write it down. The future of finance is community-powered digital finance, because what then happens is we are able to take technology that is driving the growth of the economy today and then combine that with trust that is driving community finance and cooperative finance. And once we are able to combine those two very key infrastructure, we are able to then present a financial system that has leadership with technology. And I believe personally, I may be biased, but I believe that Africa can build that resilient technology and financial ecosystem that will empower communities, that will create wealth, and that will drive inclusive financial and economic growth. Because, like I've said before, the future is in Africa. Go and look at the projected population numbers from 2030, 2050, and then you start to understand what I'm saying. Because these people are going to eat, these people are going to live in houses, they're going to use transportation, and all of that transaction is going to happen at every touch point. So the final message I'm going to be sharing here today is that Africa doesn't quite have just a trust problem. What we have is a trust infrastructure that is not actually working as it should be. So when we then digitize it and bring that particular trust that our parents and grandparents leverage to build the wealth that they are supposedly passing to the next generation, when we leverage technology to build on that, our communities already understand and have this. So what would then happen is, since we already believe in that trust system, we've already seen the result of that trust system, we can then unlock financial inclusion. to be able to have shared prosperity, sustainable economic growth, and do this at a huge scale. So we are inviting you, everyone that is watching live now, everyone that is watching the replay, and all the other people that, this message is going to get to. We're inviting you to participate in this next phase of Africa's economic growth. Thank you very much. I'll take questions. If you have any, you can put them in the chat or in the comments. And Sam, I'll pass the mic back to you.
Oh, all right, Mr. Sala. Thank you. Thank you very much. Thank you very much for that insightful session. And then I believe that we have been fully educated in terms of how we can digitalize grassroots and trust. So, as he stated in his closing, if you have any question, you could just drop them in the comment section and we'll take it up from there. So, but before that, I have a question I would like to ask. Right. So, with regards to what you've said so far, my mindset was just going to looking at the future because during your presentation, you talked about looking at the future. So I was just thinking, like, if looking at, let's say, within the next 5 to 10 years, what ideal digital experience should smallholder farmers, cooperative, what ideal experience should they be expecting from fintech providers?
So there is good news and there is bad news. The good news is technology is going to improve, so the experience would get better. The bad news is we do not quite know what the adoption rate is going to be in the next few years. Some adoption rate would be faster than others, and some would be more technical than others. However, what we should expect is more and more financial inclusion projects, ideas would then be moving online as less and less people are needed to carry out certain basic functions like administrative functions and all. It's no longer news that there is AI that is now doing a lot of back office work, and there are robots that are coming, whether we like it or not. And, these are technology that would not just participate in other sectors of the economy and ignore finance. They would also somehow, one way or the other, participate in the financial ecosystem. So once we start to see this thing, like I said, the good news is technology is going to advance. My personal suggestion would be, instead of fighting or resisting, we should start thinking of how to adopt to be able to get the best result and performance out of this technology.
All right, thank you for that. I believe your response answered the question, but I have one more question before move on to the next session. And we cannot talk about digitalizing grassroots trust without talking about misconceptions. Yes, those misconceptions are there. And I believe from your experience as a founder of SUBA Capital, I believe you must have encountered some of these challenges or some of these misconceptions that people raise in terms of when you're telling them, let's move this Isusu from just paper and pen to the digital era since times are changing. So with
Yeah.
those misconceptions, if you could just mention some, and then you could just tell how can we work our way around those misconceptions, or some solutions
Um,
rather to those misconceptions.
I would respond from, like you said, from the point of view of what we are doing at Suba Capital. One of the biggest obstacle, I think the pushback or barrier is people are afraid of change. And that is not completely unique to those who are in the cooperative finance sector or subsector, right? Humans are generally not very comfortable with change. They push back at things they don't quite understand. They push back at things that they are not sure of. They do not trust. Remember, the entire thing we're talking about is trust here. And one way to do that is to not move people from one extreme to the other without something in between immediately. Um, for us, our distribution method is a hybrid method at Suba Capital. We launched first with the digital first distribution method for those that are technology savvy in our pilot phase and um, even into the MVP phase. However, we then encountered this same barrier that you talked about. People are interested, but they don't understand the technology. So they are afraid to come on board. So what we've then done is not to adopt what they are already used to, right? They would rather people come to their shops, come to their offices and collect the cash or collect transfers, as the case may be. So what we've then done is introduce our community agent system where we have agents and collectors who then go into these marketplaces, who go into these offices and do the collection from these people. That way, that agent becomes a liaison between the market and ourselves. So once you understand that this is more behavioral than anything else, you are able to then solve that problem. Don't jump from A to Z, abandoning what people are already used to. That would be my feedback here. So we're adopting a behavior that they are already used to be able to encourage them to become financially included in the economy.
Okay, thank you very much for that session. I believe right knowledge in regards to digitalizing grassroots trust. And I like that you ended with saying moving them from both extreme because human beings naturally we are resistant to change, right? So I'll be opening the floor the next 2 minutes. If anyone has a question, we just because I've not seen any in the chat. So if you just raise your hand if you want to ask a question, if you want to make a comment, that's giving you the next 2 minutes to do so. Okay, okay. Since we've not gotten any question, I would like to hear from the audience that we have in the house. Thank you very much once again, Mr. Silas. Moving to some form of so what was he had? So anyone who is willing to share, you could just raise your hand and I'll call you up to come and share with us. Okay, peace. I can see your hands up. So you could unmute and then ask and share what you have to share.
Okay, good morning. Good morning, Samuel. Good morning, Mr. Silas. Good morning, everyone.
Good morning.
So I don't know. I'm so sorry. I joined in late, but I just have a question. I was raising my hand. Like I wanted to type in, but I said, let me raise my hand to ask the question. So I have a question for Mr. Silas, right? And I know that our topic is resilient wealth,
Yeah.
like, we're building inclusive prosperity through cooperation. So I just want to ask one question. Like, Mr. Silas, please, like, what are the biggest barriers to building resilient wealth in today's economy, particularly like, Africa, like just niching it down to like Africa or like Nigeria? What would you say is like the biggest barrier when it comes to building resilient wealth? So yeah, that's the question I'd want to ask. Thank you.
Thank you so much, Peace, for that question. Confirm that you can still hear me clearly.
Yes, I can, sir. Thank you.
Good. Okay, so one of the biggest barrier in Africa is lack of financial literacy. It is it is almost like the simplest thing, but the most difficult. And this is why. Money is not a subject that we were, taught by parents, either because they didn't know quite much or how to teach us, or they were too scared to teach us. That's one. Number two, in our school curriculums, we weren't quite taught about money the way money is in real world. We were just taught about money in terms of mathematical problems, but not in real world experiences. So while we are trying to build resilient wealth across the country and across Africa, the truth is, as much as many of us really want to build resilient wealth, we don't know the first thing to do with money. Most of us just know that we work for money, we earn money, and we spend money. That is about the most basic knowledge we have about money. Until not too long ago, financial literacy started becoming mainstream, and people now started to know that to become wealthy and to become resilient is almost like basic and advanced, in building wealth. To become wealthy and to build resilient wealth, there are certain things, certain structures, certain knowledge that you have to put into practice, certain structure that has to be in place, right? And it is also one of the things we notice at SUBA Capital. When we launched the platform, we just wanted to offer financial services, microfinance services. It then occurred to us that people did not even understand why we are offering them these services. And for the last year or more, we've now been running monthly webinars to teach and answer questions and engage the community as to why it is important to save, why it is important to invest, how to set financial goals, how to become financial discipline. All of these are encompassed in financial literacy, and that is what helps to actually build resilient wealth. That's one of the key ingredients that has been missing for many, many years in Africa, and to a large extent in most parts of the world. So, for very few people who know some of these things that others do not know, they go on to build massive wealth. And if you look at the population of the world today, that's less than 1%. It is now, like I said, the knowledge of financial literacy is now becoming mainstream gradually. And we are doing our bit to contribute to how we spread that knowledge to our community and beyond. Hopefully, I've been able to answer that question.
Yes, sir, you have. Thank you so much. Thank you.
You're welcome.
All right, peace. Thank you. Thank you for that. I believe from that question, I myself personally have learned. Once again, thank you, Mr. Silas, for sharing your wealth of knowledge with us. Mr. Silas is one person that when it comes to discussions about fintech, money, and what's the third one again? Wealth growth generally, 2 hours is too small. 2 hours is too small because it's a conversation that encompasses a lot of both government policy, integration, reaching the grassroots, collaboration. I remember one time when we had one conversation, it was just I think it was supposed to just be like a 30 minutes conversation and it spanned to like 2 hours. And the route we went, at the end, we were like trying to map out what we had covered. And we saw that we covered a lot. We went from talking about startup founders to talking about government policy. We went ahead to talk about growth strategy. So he's someone that I believe is well experienced and well versed in it. And we want to thank you for sharing your wealth of knowledge. If we were to pay you, I'm very sure that dollars will not be able to quantify. But I know if we give you dollars, you will still collect.
Thank you very much, Sam.
All
Thank you,
right, all right.
everyone.
So moving on. All right, all right. Okay, so moving on. Before we go on to our panel session, I want us to have what I call a audience interaction. Right. So how it basically works is just simple. Um, if you were asked to sell yourself in 1 minute, what would you say? So that's just the simple question. If you were asked to sell yourself in, oh, sorry, my audio, sorry, not, can I switch it off? All right, so as I was saying, if you are asked, I believe that in the business world, they call it an elevator pitch, right? So if you are asked to sell yourself in 1 minute, what would you say? So who wants to have the floor first? Any takers? See, you guys should leverage this opportunity. You don't know where your next collaboration will come from. Someone might just be on the call, or someone might watch the replay, hear what you have said, and reach out to you. And it's a business opportunity. So we are giving you the floor. If you are asked to sell yourself in 1 minute, what will you say? If I don't have takers, I'm going to call. I'll put some persons in the spotlight. Anybody? Okay, I'll call on Peace. Peace, if you were asked to sell yourself in 1 minute, give us an elevator pitch, what would you say?
Thank you, Sam. I was hoping that you'd like call people and not wait for us to like initiate because okay, hi, good morning everyone. I'm Peace and I'm a project designer who loves solving problems. I want to believe that genuinely like impacts people's life. And aside from like just caring about how they look, I care about like how they feel. And just beyond maybe creating designs, I care about like product that are accessible and meaningful. And outside design, I'm someone that like values growth and service, and I'm just constantly learning and taking on some design challenges. Ultimately, I would say, I just want to work to solve meaningful problems and then leave people better than how maybe I met them initially or like first time I met them. And yeah, that's what I would say. Thank you.
Okay, okay. That was nice. That was nice. Thank you very much, Peace. Who else can I call? Let me see, who do we have? Okay. Mr. Sellers, do you want to go? I feel let's have a professional elevator pitch.
No, let's call Isaac Bukola. I've been speaking for the last 30 minutes or
Okay.
so. Isaac
Okay.
Bukola is here. Let's get the audience involved as well. Right.
Isaac Bukola.
Rita Harrison is also on the call, so let's get them involved. Isaac, if you can hear us, you can unmute and pitch yourself. Let us know what you do, and this is it's an open conference. It's an open community today. Harrison,
Can you hear me clearly?
Yeah.
come again?
Hello?
Yes. So
please
we said,
confirm if you hear me clearly.
yeah, we can hear you clearly, Isaac. What do you do?
All right.
Where are you based? Pitch yourself to us.
Okay, so, well, maybe before I do that, I'm going to be one of the, panelists for tomorrow. So it's not bad if I introduce myself,
Not a problem.
earlier
Go
before
ahead.
the session. Yeah. Okay, so I'm Isaac Adesinji, and I'm a finance professional, right? I work in assurance. I assist businesses, just like what we are trying to address here today. I assist businesses when it comes to financial planning and analytics, when it comes to business valuation, doing financial modeling and all of that. These are things that are very, very much important, especially when you are trying to, do a startup, you are trying to start your own business. You want to know what are what are your bargaining chips, right? You want to ensure that, a form of valuation to the idea you have. Gives you help you to know the financial, mechanism you can, deploy into your business. So these are some of the things that are required for businesses, just so they are fully aware of their potential and what they could make of it. So I have cases where you have clients that they don't even know what they can make out of what they have. They go to somebody who is to finance their business, and the next thing they are negotiating for 50%, 40%, 30% equity. And by the time you do the valuation, you see that, okay, so on the long run, at the end of the day, it looks like you have just done charity. So these are things like businesses do, right? And I love it so much because, in fact, when I was looking at the invites today, I was just like, this is a space I really, really, really want to come and contribute to, because, like you said, Africa is the future, and
Yeah.
whether we like it or not, it's coming. So it's now how prepared we are.
Yeah.
And these sort
Good.
of businesses we are seeing today are the businesses that will eventually, you know, you know, put us on that map if we do the right things. I work in assurance as well as an external auditor. I do forensic audit as well and all of that. So I've been exposed to larger companies and what they do, their source of financing, the challenges they have, very heavy cost of finance that they have to pay for this financing and all of that. So it's beautiful that we are doing something like this, because it helps us to prepare the small businesses of today that will become the large ones tomorrow. It helps us to prepare them well. And as well, a very important one is also, policy, research, and contribution, right?
Yeah.
The government impact, regulators, all of these things. So these are areas I'm actually on both ends, right? At the regulatory aspect, yeah, I participate, and at the same time, helping businesses to also be, you know, well equipped, well prepared for any, issue that might be coming in the future. We can see the tax reform coming today, it's impacting financing as well,
Yeah.
right? So I think I've thought so much about me. So we'll do more tomorrow. All right.
All right. Thank you
I'm
very
sorry,
much,
please.
Isaac.
I'm at the client's office. I have to just quickly step down. Apologies. Thank you.
That's completely fine. Thank you. Thank you for participating. Thank you very much.
Thank you very much, Isaac. And for our time, we will be calling on one more person. Rita Harrison, the spotlight is on you. So if you're asked to sell yourself in 1 minute, what would you say?
Hi, everyone. Good morning. Okay, so
Good
my name is
evening.
Rita. I am a business. Can you hear me?
Yes, we can hear you.
Hello, can you hear
Yes.
me? Okay, so I said my name is Rita. I am a business growth professional and a data analyst. I am passionate about helping businesses grow and helping people succeed. Over the years, I have worked across different sectors from customer service to procurement, education, fintech, entrepreneurship, and people management. And this has given me a broad understanding of how different organizations operate and what makes it achieve its sustainable growth. Currently, I lead people and business growth at SUBA Capital, where I support business development, team performance, customer engagement, and strategic initiatives that drive results. I enjoy solving problems, whether it's analyzing data or uncovering opportunities, um, improving processes, or helping teams perform, at their best. I am currently and always looking for ways to create value and to make meaningful impact. Beyond my professional work, I am also passionate about financial literacy, about empowering women and young people, about supporting initiatives that create opportunities for individuals and communities to thrive, because I believe that when the right people meet the right opportunity and deploy the right strategy, remarkable things can happen. So I'm excited to be part of this conference this year, and I look forward to every opportunity to make things happen. Thank you.
Okay. Thank you for this. So the whole concept or the whole idea behind the sell yourself for 1 minute is because as business owners, as young professionals, as entrepreneurs, we have to be and what you do. Conversation a few years ago, one way you can grow your business is by selling your business. Nobody is going to sell the business for you more than you can. You are the best person that can sell your business. So the whole idea behind the spotlight yourself in 1 minute is to make entrepreneurs and business owners be more comfortable with speaking about their business, about themselves, what they do in rooms. And most times you might not have as much time as possible. That's why it is called an elevator pitch. So between the time you get into the elevator and when you get out of the elevator, can you be able to comfortably convince someone to buy into your idea, into your business? Can you sell your products or services? So that was the whole concept. And I feel we'll still do this again, but because of our time, we'll be moving over to our panel session, and then we'll come back to the sell yourself segment. So at this point, we'll be welcoming in our panelists in person of Mr. Chijindu. Please, Mr. Chijindu, confirm that you are on the call.
Yes, I am. Good morning, everyone.
All right. Thank you very much. Mr. Chijindu, thank you for being with us on today's session. So before first things first, in the panel session, we are going to be talking about the topic mobile money versus cash hoarding. And for this, we'll be looking at beating inflation in real time. In Adaku's opening speech, she noted about inflation being a major problem for smallholder farmers and business owners, entrepreneurs, because you have a budget. For example, you budget 100,000 to be able to restock your shop, to be able to restock on some products, only to get to the market, and then you're now finding that 100,000 cannot get you all you need. So that is what we'll be discussing today. Having mobile money versus cash hoarding. How can either of them beat inflation in real time? So first things first, we would like our panelist to introduce himself so that the room can know who we have on. So Mr. Chijindu, you have the next 1 minute to briefly introduce yourself.
All right. Good morning, everyone. Good morning, SUBA Capital. It's nice to join you guys again on the SUBACON conference. Yeah, my name is Chijindu SUBA, and I am a financial markets trader and analyst. I currently serve as an analyst at Value Food Trading, where I analyze various instruments ranging from commodity, currencies, stocks, bonds, and also beyond analyzing, I also trade the financial markets generally. And in brief background, I have a degree in computer engineering, and I'm also a developer as per my education. I still practice from time to time, but currently I'm fully into financial markets. So my developer side is merging with my financial analyst side to create tech products for financial markets generally. So that is who I am, and this is what I do. I help people make money. I help people create solutions to help them ease their businesses and also make more money for them.
All right. Thank you for the introduction. So getting into our conversation for today, we are focusing on inflation, and then we understand that inflation is just simply reducing the value of money almost every month, and this is one thing that small businesses encounter. So for a small business owner keeping cash in the drawer, or let's say at home, that Mama Sikirat that owns a booker, and most of her income was physical cash. What is the real cost of that decision? That is having to keep your cash rather than having mobile money. What is the real implication of having the physical cash?
Okay. So normally you would see the costs of having physical cash. For some people, they will say it's theft. For some other people, they will say it's loss, maybe due to fire or emergencies. But for me, I would say one of the biggest issues with having physical cash is loss of purchasing power. If you are keeping physical cash with yourself for a very long time, or an extended period of time, the biggest cost is loss of purchasing power. It's not theft, it's not fire. Those ones can happen, but they are like once in a lifetime events. You will not have thunder striking in two places at the same time, except on very rare occasions. So the biggest cost is loss of purchasing power. So if for many people and for largely many small and medium business or enterprise owners, whenever you are having cash at hand to purchase a particular product or to run your business later on, and then you've kept that cash for some time, when you go back to the market, you realize that cost of goods have increased. The cost of transporting the goods have also increased. And this is also going to tell in the cost of the man management. So all these things are going to be creating problems for small and medium enterprise owners. Keeping cash at hand is no longer the go-to way. Usually we used to say cash is king, but right now we'll say productive cash is king. And this is what I mean by saying productive cash is king. When you have money working for you. Now, when we say having money work for you, we don't necessarily mean all the whole money must be bringing interest for you, or you must have put the money in somewhere else. Money working for you simply means your money is reducing stress for you. Your money is helping you beat inflation. Your money is helping you achieve the goal of what the money is, which is a tool to make life easy or a tool to achieve a particular purpose. And for me, I have some practical solutions that I would like to share. For the first instance, when you are having physical cash or when you have savings that you are afraid of losing due to inflation, there are some things that I would advise you do. One of them is to keep only operational cash. When you have bulk of cash you saved up for your business, I would advise that some of those money should be kept for operations, for buying electricity, for paying electricity bill, paying any other bill that your business needs to run effectively. You keep some cash for that. So the only cash I would advise you hold at hand is operational cash. Then the next set of money you would have is you use some of them to also purchase or to make inventory or buy inventory as early as possible, especially where it's appropriate. Because if you've stayed in the business long enough, you know that most businesses have seasons. Seasons where the inventory or the goods are cheaper and seasons where they are more expensive. For instance, this is rainy season. At this point, I think things like maybe building materials will start getting cheaper because no one is building at this time. Okay, so for your own business, you should be able to sit down and analyze in a year cycle, in the cycle of 1 year, what particular period do we have goods cheaper? And then when you're at that period, you use some of your savings to purchase inventory ahead of the next season, especially if you're not dealing with perishable goods. You can purchase inventory as early as possible. Then you'd also use another portion of the money and invest in things like mutual funds, things that are going to bring interest to you whenever you want to put your money. So you can put your money in mutual funds, or you can even buy cheap treasury bills from your banks. If you go to your bank, or if you even meet SUBA Capital, it can help you make arrangements for that. So if you put some of your money in capital or in profit yielding savings account, or in mutual funds or in treasury bills, this kind of systems are going to help you to, if not inflation, maybe match up to inflation. Right now, the state inflation is around 20, returns of around 16% plus or minus 16.5%, I think. So that is already helping you match up inflation to some extent, even though there's about 4-5% deficit. But at least you've covered up some costs. So you put some money in this kind of instrument that will help you return profits when you're about to move in your capital, and especially when you need it, because this kind of instruments, for some of them, they have yearly period, quarterly period, half-year period, so that you can always remove your money when you need it. You have access to your cash. So that is the third thing I think you can use your money to do. And the fourth thing is putting or investing your money in business productivity. I once had a photography studio who, every time I went by, I was just going to visit a place close to where they were always running on generator. And I think for like 4 years that I was around that area, they were running on generator. And I thought to myself, I said, if these people have purchased solar system for like maybe $1 million or 1.2 million, it would have served them for all those years. All they'll keep doing is just servicing the solar, which is like maybe once in a year or once in 2 years. And the money they've spent on fuel alone would have been more than the 1.2 million they had invested in making that business productive. Because they're always having a staff go to buy fuel. Time is already going. Then they'll come back and pour the fuel, and then also service the generator almost on a monthly basis because of the frequency of usage. So if they had invested in a solar system, it would have made them even more productive, in my own belief. So sometimes when you have money saved up in your business, you should look at the things that can make your business more productive. Are there softwares that can help your business be productive? Are there trainings your employees can attend? Are there equipment or tools you can purchase to make your business productive? If you invest in it, in the long run, it's going to pay back in good dividends. Then lastly, separate emergency fund from idle cash. So from that cash that you have idle, when you've put it in all these other 4 things I've mentioned, you keep some amount for emergencies, because there are some emergencies that can catch you off guard. and you would need cash to be able to sort it out immediately. So your emergency cash can also merge with your operational cash. Just make sure that you have your money in these places so that you'll be able to beat inflation. So when you're going to make purchases of goods, you will be able to beat inflation because you'll be buying inventory early enough before the time where the prices hike. When you invest in productivity for your business, you'll be earning dividends in future because it's going to make it easier for you instead of spending more money on these little things. And then when you put your money in capital or in profit yielding instruments like mutual fund or T-bills, whenever you need your money back, you're going to be getting it with some certain interest. These are the ways I believe small and medium enterprise owners can beat inflation or match up to inflation. I hope I answered your question.
Wow. You did not just answer my question, you answered like 2 other questions. Bro, you just went. I had to now like, okay, I have answered this and that goes. Thank you very much for that. I think you didn't just answer the question, you even went over and beyond to provide solutions on how we can beat inflation. So, with what you have said, right? I think one of the mediums you mentioned that small business owners can use to beat inflation is leveraging some of these fintech tools. So beyond sending and receiving money, which is essential, what are some other digital financial habits every small business owner should adopt today that can help them build some form of long-term financial resilience? Because we are not just looking at short term, we are looking at long term. Because when we talk about resilient wealth, we are looking at how your wealth can last for a long period of time, down as far as handing it over to your children, building legacies. So, what are some digital financial habits small business owners can start implementing now that can help them build long-term financial resilience?
All right. First of all, because of my area of expertise, I've helped small businesses to build tools, small apps that they can use to manage their businesses moving forward. And one thing I've realized along the line of doing this for a period, and also when I'm advising small and medium business owners, is that a lot of them are mixing up personal cash or personal amounts with the business account. And this is not going to help you to be able to know your numbers in the business. So the first thing I would advise you to do is to separate personal accounts or personal finance from the business finance. So that this way, when you're running calculations, when you're imputing your data in various tools that you're using, you would have accurate data and your numbers are going to be complete. So separate the account. Even when you want to apply for loans, when you want to apply for grants, these things are going to come handy. So make sure you separate the account. Then, when you've done that, first thing I'll advise after you've done that is to have or create a digital bookkeeping system. When I say bookkeeping system, a system that has your credit, your debit, in fact, the whole numbers of your business, your sales record, your expenses record, your purchase record, your inventory, every other system that you have for your business, anything that has to do with numbers, instead of relying on your memory. Yes, your memory might be 1 trillion bytes, but it's easier to have these things written down or punched into a system that's going to help you keep records so that you can have references. So create a digital bookkeeping system that is going to help you keep your records. So beyond sending and receiving money, have a system that helps you keep your record on a daily basis. Keep your record. A time is going to come when your business will grow, and then you can have an accountant that does that. But while the accountant is not there, you're not going to be running a free-flowing business. Make sure you have a record that you use to compute every single data, your expense, your purchase, your sales, everything should be computed digitally because we are talking about digital solutions. So create a system that does that. You could use Google Sheet or Microsoft Excel, which is going to help you to do that. You could also go online and search for some other tools that can help you to do that. We have tools like Zoho. Zoho is becoming more compact these days to help business owners. So you can go on Zoho and look at the various tools that they have, and they're going to help you or you can find from those tools the ones that can help you keep a digital bookkeeping system. All right. And then the third thing is to review your cash flow on a weekly basis. It's not only when problem arises. For some business owners, it's only when they are suspecting theft. When they see one of their sales rep buying a new phone, they start to suspect, and then they start checking their books. Or when they notice that one of their sales rep is moving in a different way, or when they notice money is missing, they start to check their books. You should be reviewing your cash flow, if possible, on a daily or on a weekly basis, so that even if problem arises, you can know where to track back from or where to track back through. All right. So make sure that you have your cash flow reviewed. And it's only when you have record, which leads me back to the first thing I mentioned. It's only when you have a bookkeeping record that you will be able to reference. So when you have your bookkeeping system, you can now review your cash flow on a weekly basis so that you know and be sure that everything is playing according to plan for your business. Then things like taxes and future investments. You can have automated systems that can help you with that. I believe SUBA Capital should have one, or should maybe come up with one sooner. Things that will help you automate savings, things that will help you automate investment. So you can say, for this particular account, any money that I put in it is for my savings. And automatically, the moment you deposit money into it, a certain amount is invested and a certain amount is locked up maybe for a future use. So you should make it almost automatic. So you don't have to do it based on vibes. You don't have to do it based on feelings and emotions. So this month you feel like saving, next month you don't feel like saving. This month you feel like using your money to pay yourself, next month you feel like saving some money. If you automate it this way, you build a rigid system for investment in your business. I'm not talking of personal investment. You can have your own personal investment separate. We're talking of investment for the business. I think it should be automated so that you don't have to misappropriate or mismanage the funds that you receive. And businesses that survive difficult economies are rarely the biggest. They are those businesses that usually understand their numbers, they have their data, and they can use all this as a competitive advantage for them against any other thing that will be thrown at them. I hope I answered your question.
Yes, you did. And I think from your opening sentence alone, I could see Mr. Silas' reaction. And he was like, this is one thing we have been overflogging, and we have been telling your business owners, separate your business money from your personal money. In fact, sometimes they will say, if you ask me as a business owner, I will say, the business has money. Me, I am broke. I don't have money. So that is one way you can help grow the business. So with all what you have said, I want us to go back to the whole money, mobile money and cash. So at what point do you think holding cash becomes a business risk instead of a business convenience? Because some persons might argue that, oh, having the cash, having that physical cash is more convenient than having it in a say in a digital wallet, because when instances come, is the one that you're holding in your hand is what you can use. So at what point does holding that rather than a business?
Okay. If I get you clearly, you're asking the particular point where holding cash become risky rather than for convenience. I would say, here is what I usually do. I would say, the question I would ask myself is this: if I keep this money idle for 30, or if I don't use this particular amount of money that I've saved from my business for the next 30 to 60 days, that means it's not an emergency cash. If the money that particular amount of money can be idle for 30 to 60 or even 90 days, then that money is already idle cash, because there is something that money would have done for me within that period, and the money would have returned. And after returning, it will return with either capital appreciation, or it's going to return ease back to my business. So the point where it becomes idle cash is once it exceeds 30 days of being idle without use, or 60 days of being idle without use. It's already risky. It's already idle cash that should be deployed into something. So at that point, you can use it to stock up inventory, like I mentioned earlier. You can also use it to, or you can put it into income generating financial instruments like the ones I mentioned earlier. So if you ask yourself this simple question without any complication, this money that I've saved up from my business, this business profit I've saved up, if I keep it for the next 30 to 60 days, will there be any need for it within that period? If the answer is no, then that money should be invested into something. If the answer is yes, that means you'll be needing the money sooner. Then you should deploy it into what you need to use it to do sooner. But if it's going to be idle for that period, I would advise you put it into something that is going to generate profit for you. No amount of profit is too big or too small. 4% is enough, 6% is okay, 10% is great, 16% is good. So you should deploy that money the moment you realize it can sit idle for 30 to 60 days without use. And when you do so, you will not have idle cash sitting around.
Well, personally, I have learned something today, 30 to 60 days. So any cash that stays within the range of 30 to 60 days can be termed as idle cash. And then I'm seeing a comment that says this is okay. So I'm seeing a comment that said this is what Adako has been preaching our webinar series. And this just goes as far as telling you that in the business sector, this principle remains the same. This is just another person confirming what a different speaker has said, and both of them were not even in the same room. They are saying exactly the same thing, and they were not in the same room. This goes as much as to tell us that in the business sector, principle remains the same. So what is applicable in business A is also applicable in business B. So moving on, there's this question that even I myself, I find it kind of challenging most time because many entrepreneurs, focusing on entrepreneurs this time, confuse revenue with wealth. So they feel that because they are making sales, then that means that they are wealthy. But for an inflammatory economy like Nigeria, what you mean by that is an economy that is not stable. Inflation can happen overnight. How should business owner think directly about things like cash, profits, and assets?
Okay. Um, some people belong to the school of thought that revenue is vanity. I've not come to the complete realization and acceptance of that particular thought, but I see some sense in what they said. And most people are saying so because you can see a company that is recording revenue of 100 million in a year. And when you calculate genuine profit, not profit that was manipulated to reduce tax, genuine profit, it may not be up to maybe 1% of that 100 million. 1% of 100 million is 1 million naira. So you see some people who are doing revenue of 100 million and yet they cannot boast of 500,000 naira of profit after expenses, after taxes, after deduction, after paying staff. The business itself cannot boast of 500,000 naira. So if there is any emergency beyond the business projections for expenses, then they are almost in chaos. It will lead them to debt. So I would say that businesses should focus mainly on revenue is good, by the way. Revenue is still good because it's revenue that you can use to get loans, you can use to get investments into your business. But then while you are trying to generate revenue, have profits at the back of your mind. A good person
Mr. Saras, please confirm, can you hear me?
Yes, I can hear you. Can hear you. I think
Oh,
the reception in
network
this
glitch.
place went off. Yeah. So just give him a few minutes and see. Hopefully, it's not the reception in Nigeria getting angry about our conversation.
Oh God, they see that we are calling them out. We are calling the recession that is angry.
Let's give him a few minutes.
Yeah, sure.
So we are still live for those that are watching live on YouTube and on other platforms. If you have questions, if you have comments, you can drop them in the chat box or in the comment section. Um, I see a couple of people are watching live on YouTube as well. So um, do drop your comments, drop your questions, and uh,
Yeah,
participate
for our
in the
YouTube watchers, take
conversation.
your questions. Okay, I think he's back. Chindu,
All
please
right,
confirm you
sorry.
can.
Yeah, sorry, I lost you for a bit. My network was just fluctuating, but it's back now, stable.
Yeah,
All
that's
right,
fine.
so let me just summarize my previous point. I was saying that as much as you try to create or generate revenue for your business, you should also be looking at the price markup to ensure that you have enough profit captured from your revenue. And this is basically what you would use to expand. This is what you would use to repay loans when you are already having a lot of
While we wait for him to come back, as I'm thinking the network difficulty has surfaced again. So just as Mr. Sala said, if you have comments, if you have questions, you could drop them and then we'll treat them. If you are not watching live, you can always drop your question in the comment section for those who will be watching the replay, and then we'll try to get an answer across to you, same in the comment section. Um, so please, so fast as we have watched so far, you could just share with us on our social media platforms at Suba Capital, your key takeaways, your most interesting session, what's the aha moment that you've had while watching this conference so far. You could just share with us because, as we said earlier, the key is building a community. We are building a community where we can all grow together. So you don't know that contribution that you had, that experience that you have encountered might be what someone else is going through, and that your contribution can help the person navigate through it. So we have Mr. Chinedu back.
Okay,
All
so
right.
sorry, so sorry, so sorry. So I was trying to round off my previous points where I said revenue is very important. But attached to the revenue should be substantial profits that will help your business grow. And then also focus on cash flow for survival. And very importantly, you can use the profit generated to purchase assets that will make the business to grow, assets that will make the business more efficient, assets that will make the business more productive, and assets rather that will generate wealth for the business. I hope you can hear me still.
Yes, we can. Yes, we can.
Okay, all right. So just to round up the
All
question.
right.
So I said
Thank
real
you.
wealth is created
Sachin, I
when
think
you
we
say
have
today's profits
two more
can purchase
questions
tomorrow's asset.
Sorry?
Oh, I was rounding off the previous question. I said real wealth is created when you can be able to say today's profits can
Can you hear
purchase
me?
tomorrow's assets. Yeah, I can hear you now.
All right, thank you very much. So it looks like Sam has also got kicked out by the reception as well. So we'll just be finding our way around because hosting virtual conferences it- it's becoming something. Um Sam, are you back now?
Yes, I am. Yes, I am. All right. So, apologies. God will help us.
Say you had
So,
you say you had two more questions. So can we
yes,
just take the
yes.
two more questions so that we can
Yeah,
wrap
do
the
that.
session up?
I'm happy to. So, one of the questions I have is in terms of volatility because um, looking at inter trade between different countries. Nigerians we import and we do export. So in that scenario, we have we have currency change. So how do businesses exchange? How do businesses navigate that exchange rates when volatility? Because it is actually affecting businesses in Nigeria today. So what would you advise a small business owner to do to be able to prepare for such scenarios where the value of the naira continues to dwindle?
Okay. I was just thinking about it as you mentioned, as you asked me the question. I was thinking about the things that I've done in the past that has really, really helped me. One thing I would say is trying to understand your business. If your business is such that interacts with exchange rate a lot, then you should try to understand the exchange rate. Try and understand the seasonalities behind it. For instance, because my own business, I have a lot to do with the US dollar. I know some of the seasonal, I understand some of the seasonalities of the US dollar. I know sometime around September, we expect the dollar should be to be high. So anything I would need to do with the dollar, I try to do it as early as I can before September because dollar is going to get high at that period. Sometimes around December, due to mass returns of those who traveled abroad and are coming back for the holidays, we expect high inflow of dollars, so dollar to be cheaper. So anything I need to do, I will try and do it within that period where I know that the dollar is cheaper. Okay. Then around summer period, when people are traveling for holidays, people are traveling back to school or returning from school, we know that dollar can be very tricky around that period. So I become more careful in how I exchange the dollar to make purchases for goods and services. So the first thing I would advise you to do is to try and understand the economy, try and understand the flow of that foreign exchange, that especially the one you're dealing with. For those who are dealing with Chinese suppliers and Chinese manufacturers, try and understand the whole scenario, understand how the exchange rate fluctuates. So exchange rate is not just fluctuating because it feels like there's no emotion attached to it directly. The emotion is on us human beings. So try and understand what are the things that are driving those exchange rates. You can ask your exchanger so that you can know the best time to get the best prices. Okay. Then by doing that, you'll be able to review prices as often as possible. Then the next thing I'll advise again is avoiding unnecessary foreign exchange exposure. By that I mean your business is running in naira and you're making purchase in maybe renminbi, in US dollar, or in any other country you are dealing with. Try and reduce your exposure to those currencies so that you not have deficits. What I mean by that is when you reduce your exposure to those currencies, whenever the exchange rate is fluctuating, it will not affect the real value of your money immediately. Okay, so in essence, you or exchange the currencies or exchange your cash when you need to. Don't try and forecast it if you don't understand. It's when you understand that you can now start forecasting multiple exchanges or multiple exchange rates scenarios. So before forecasting or before trying to put your money in foreign currencies for purchase of goods, try and make sure you understand it first. And while you are trying to understand it, keep your money in your local currency first. When you've now understood the foreign currency you are dealing with, then you can now start forecasting and putting your money in those currencies prior to when you need them. Then two more things. The last one is make sure you maintain good margin, or if possible, a healthy profit margin in your business, because these are the things that would accommodate for the exchange rate differentials. So try and make sure that you have a healthy profit margin, such that if you factor in the loss from the exchange rate, you still have profit. So you not end up giving up all your profits to the market because of exchange rate. So factor in the difference in exchange rates by having a healthy profit margin that can accommodate it. And lastly, if there is a local alternative, then try and see how you can compare the local alternative to the foreign alternative or to the foreign product you are importing. If there is a local alternative that is cheaper, then you should go with it. You can see nowadays we're having Chinese companies coming into Nigeria to build their factories so that they can make goods cheaper or easily accessible to people. So you can go all out and do your market hunt and find out those local alternatives, both from local manufacturers and local suppliers, to see how you can cut off that exchange rate issue that you're having. So with this, I believe you'll be able to reduce the instances of volatility in exchange rate and how it affects your business.
All right, all right. Thank you so much for that. So to close out this session, we're going to be closing out with an advice from you. So if you could give Nigerian smallholder farmers, entrepreneurs, small business, SMEs in general, one immediate action that they should take this week to stop losing money to inflation, what would it be?
I have plenty, but I'm just thinking of one because you asked for one. So I'll just say one. Let me just say it this way. Make sure your business is profitable and the profits from your business is also working for the business. So make sure your business is profitable and let that profit from your business also be a staff that works for your business to generate more money. That's all I'll say. You asked me for one, so I'm just saying only one.
Okay. If not for time, we would still have, we could still go on and on because I still have a lot of questions that I would love to ask, but because of the time constraints and some other factors, we'll be coming to an end. We'll bring this panel session to an end. However, if anyone in the audience have a question, you could just signify by raising your hand and then you'll be called upon. We'll give you the floor to ask the question. So any question from anybody? As I said, we are discussing mobile money and cash holding in respect to how which one best beats inflation. So any question from anybody, just signify by raising your hand. Okay. Mr. Silas has a question.
Hello, Chidindu. Thank you very much. Thanks for coming back again to this conference. And like Sam said, one of the first things that you said really ticked the box for us. Having financial records and separating your personal income or personal revenue from your business money as a small business owner. So how would you say that keeping records, right, help strengthen the finances of a business? Because you alluded to the fact that sometimes people wait until they notice monies are getting lost or something is happening before they start rushing to look at records as a curative measure. But how does preventive record keeping financially strengthens the business for growth? That's my question.
Okay. Someone who has managed the business before, I would use some of my experiences and some of the things I did in that time, or some of the things I use in my business to give an advice on this. For some time, if you do not have records, you may not know what part of your business is working for you and the one that is working against you. For instance, just an example, you could maybe be selling among the various products you sell. one of the products might be selling at a loss and it's costing the business. And the moment you stop selling that particular product, your business revenue or your profit in the business is going to skyrocket. So most times, if you don't have that particular record, you may not be able to figure that out. So one of the things that I would advise you to do is create that record that explains to you, which is the business owner, you're the one that have the record. You have record of the products you've purchased, which we'll call the purchasing book or the purchasing record. You have in that purchasing record, you have the name of the product, the amount of money you purchase the record, the quantity, the amount of products you purchase, the price that you purchased it at. Then in your sales record, you can also have the goods that you have sold, the price you sold it at. All right, and any other record, and maybe possibly the time and the date and whoever sold it. So when you're now comparing how much you bought this particular product in the whole month of June and how much you sold it for, you can now do your comparative analysis and see which product is bringing in more money into the business. And as a way to make the business thrive, just like you asked, you can now know the products to purchase more. You can now know the products to have a greater inventory for. You can now know the products to advertise or market more of, because you know that that particular product is a killer. You know that particular product is a saver. It's one that is saving your business. That particular product might even end up becoming your flagship product. So because you've done your comparative analysis of your product, you know which one is making more money for you. You know which one is a more demand from your customers, because you can feel that you have all the records in your head, but when you do your analysis, true insight and true data can be inferred or can be gotten out from your analysis. So having these records, as little as they are going to help your business. Then you can also know your expenses record. In your expenses record, you're talking about the money you spend in running your business. And from there, you can know the things that you are spending more money on. And if they are not making the business efficient, if they're not making the business better, then you can cut it off. For some people, they are spending so much money in making the business environment send so well. And most times, maybe the business is the type of business that runs largely based on orders online. And you are spending a bulk of cash in making the aesthetics of the business. Yes, aesthetics is good, especially for working businesses. But your business is not much of a working business. It's not a business that demands a good perception from your customers or from you to your customers. Then you shouldn't be investing almost all your profits into aesthetics. So from your expenses or from your expenses record, you can know things to cut off. All right. So the first thing I mentioned was having a record of your purchases, having a record of your sales, so that you can compare and know products that are doing well based on profit margin. You know products that are costing you so much to get in. Sometimes when you figure out those products that are not so profitable, it could be that your supplier is the issue. It could be that the transportation channel is the issue. Some particular products you might be having to do cargo planes, using cargo planes to ship them. And because you need them maybe in 5 days' time, when you use cargo planes to ship, you get it delivered on time, but it is costing you a whole lot. So you see that the cost price and the sales price are not enough to generate profits for you when you subtract it. So you can now say, okay, instead of using cargo planes to ship in this product, why not look out for the best sellers? So you go back to your record again. All right, you go back to your record and find best sellers. Then for best sellers, you can now stock up early enough. You can now purchase on time. So that in this case, you will now use ships that will take maybe a month or two to deliver and save you maybe 50% of the cost compared to cargo. This way, you already have inventory ahead of time at a cheaper price in case of transportation. Now, when you are now selling it, you are selling it at good profit margin. So with this very short example, I've shown you how that you can use your purchasing book, your sales book, and your expenses book to figure out how to make your business more profitable. So these records are going to very much help you. For various other businesses, there are other records that needs to be kept. Records like your staff salaries, your other expenses, maybe if you are feeding your staff, if you're housing your staff, your rent, your taxes, if you're paying tax at what amount. So all these things can help you to keep good records. And at some point, another thing, lastly, like I said, records can help you do is that when you present your business to an accountant, assuming your accounting acumen is not so high, or you're not so good with numbers, but you're good with marketing the business, you can get an accountant that is not just like an in-house accountant you keep at a retainer. You can just get an accountant that can look at your books for a month, and they can tell you the parts that you are leaking money or where money is leaking from in your business. And once they run that survey and run your analysis for you, or you can even get a business intelligence person who run a quick analysis for you and tell you the things that are making your business prosper and the things that are making your business lag behind. And it's only when you have these records and these numbers that you can give it to somebody to look at. So these records are important beyond sealing or beyond closing, beyond trying to tighten up your cash or close your money so that it doesn't get missing. These records can also help to expand your business. I hope I answered your question.
Yes, you did. And I was just going to ask a very short follow-up one. The response focused on products. I wonder if this is applicable to services as well, because some small business owners in our community are service-based businesses. You know, maybe the masseurs or people that, offer um, fumigating services and things like that. They don't quite have to buy or supply product. They are service-based businesses. So I don't know if this also applies to them. And somebody in the chat was saying that they also had that same thing in mind to ask.
Okay. Now for services business, the records are going to be different, but the same principle would apply.
Okay.
Because if you're running a services business, if you are a masseuse, you're going to purchase equipment you would use. The oil, yes, maybe the massaging gun, massaging towels, the tables. You need to make purchases. So you're going to spend money, even as much as money is going to come in. If you're running a fumigating business, you need to maybe service your fumigating tools and equipment like the cutters, the chemicals you're going to be purchasing. So for every business, there's definitely going to be income and there's going to be expenses. So you also need a record of these things. There are some of the tools that you use to run your businesses. The prices may be changing at different points in time. So you will also need that intelligence of knowing when to stock up equipment, when to stock up tools that you're going to be using. You would need the record of how much you are spending on your business, transportation costs, inventory of your total number of equipment and tools you're using, feeding, and every other thing. So record keeping is important both for service-based businesses and product-based businesses. If there is any overhead you need to cover, you need to record all these things. And then you would also factor in your pricing. These records will help you factor in all the expenses into your pricing to be able to make sure that your profit margin is healthy enough. Because if you don't know how much you are spending on transportation to your business environment or to your client's place, you'll not be able to factor in how much you charge. So you need to be able to have an account or a record for your transportation costs. If you are using electricity to do anything, maybe to charge your equipment, you need to have a record of that. You need to have a record of how much you're using to service your equipment, so that at the end of the day, when you are charging, you're not just charging for your skill alone. You're also charging for your skill and the tools you use to deliver that skill. I'm not saying if you buy a laptop for 2 million, you now charge every person for that 2 million. It could just be maybe a fraction of that amount of money. Okay, so you will not say, okay, because I'm creating a website, I need to charge 10 million because I bought laptop of 2 million. And tomorrow you are creating another website, you still charge 2 million because you bought. No. I'm saying things like internet services that you use to execute your businesses, you should be factored in. Yes, you bought a laptop for a year. Assuming you use that laptop for 2 years or 3 years, you can divide the total amount you use to purchase the laptop into 3 years, divide it into months, so that you can know that, okay, this month I spent 10,000 or 50,000 on my laptop purchase. Okay, so that when you are now charging people for your particular service that you're rendering, that profit will be enough to get you a new laptop when you want to change it.
Or if it
because
gets
I've seen a
broken
lot
or
of people who are
something
in service
happen.
businesses that cannot buy equipment back for that business. You have to now take loans. All right. So if you have that numbers, divide it in 2 months. So if you're using a laptop, you're using internet, you're using electricity, check how much you spend on it for a year. Divide it into 12 months. Divide it into 4 weeks. So you know how much you are spending on your laptop per week. You know how much you're spending on internet per week. You know how much you're spending on power per week. So if you have a job that is going to last a week, you will know how much you are spending on your equipment for a week. Then you add your markup, which we can call workmanship or a service fee for your particular service that you are rendering, because you already have the skill. When you now add that, you can now properly charge in a way that makes your business to grow. I hope this is very much applicable to service businesses.
Yes, it does. And the person that made the comment, I hope that has answered the question as well, so that it doesn't look like we are just having these conversations on our own, right? I'm glad that somebody also had that thoughts in the comments in the chat box and were able to touch it. All right, Sam, back to you.
Thoughts, yeah. All right. At this point, I just had to leave you guys to just flow. But I said it earlier, to leave Mr. Silas 2 hours, we're going back and forth. So thank you very much, Chijindu, for coming again for SUBACON 2026. We really appreciate your dedication to ensuring that smallholder farmers, small businesses are able to build business structures and build systems that can help them last in their business. Once again, if you have any comment, if you have any question, if you have, in fact, if you want to just express yourself, you have an experience that you have encountered in regards to your business or something that has been said over the course of all the conversation that we've had that resonate with you, you can just share it with us on any of our social media platforms, X, Twitter, X, Instagram, Facebook, LinkedIn. You just feel free to do all of that. So thank you very much again, Mr. Chindu, for coming on. We appreciate you for this. Thank you very much. And then we'll be moving over to the last. All right, thank you so much. We'll move over to the last session. Yeah. So that's the last session. Sorry, we are coming to the end of we've come to the end of today's session, and I'm very, very sure that everybody who had come on the call has gotten something, 1 or 2 things that resonates with them very well. I will emphasize this again. Please share, so that people will see that you are learning something. Because one of the goals that is around this whole conference, our webinars, is to build a community where we can exchange knowledge. That is the core foundation of having programs like this, of having conferences, is to share knowledge. You might not necessarily be a speaker, you might not be a panelist, but you might have experienced something that your sharing alone can help someone else to solve. So thank you to everyone that have taken out time to come for today. We can officially say that we have come to the end of day 1. Day 2 tomorrow promises to be very, very massive, as we will be looking intensively at concepts that has to do with the grassroots. We're looking at micro and small business owners. Our topics for tomorrow, our conversations for tomorrow, are centered on those areas. So thank you everyone that has come. Once again, our handle at SUBA Capital. Please also ensure to follow us on our YouTube channel and our Spotify, same as SUBA Capital. So we kept the name consistent, so it's not very hard for you to find. Just go to any platform, be it the social medias, YouTube, Spotify. So if Spotify is more of your thing, like Mr. Sai, like that likes to listen on the go, just vibe with us. We've come to Spotify, so you can also go there on your commute while you are working. That is while you are working, you could just play these things in your ear and help build yourself with the knowledge. Thank you to everyone. Thank you to our speakers. Thank you to our panelists, even to our audience. You guys have been amazing. We are going to pick things up again tomorrow. And please, please tell your friends, tell your neighbors, tell even your enemies. Yes, we will help your enemies go to business. Yes, tell everyone, just spread the word about what we are doing here. And then we're going to commence tomorrow, which is going to be day 2 of the SUBA Capital Conference. And we hope that looking at just today, tomorrow will be much more insightful. We have workshops and workshop session, we have another panelist session, and we have another keynote speaker that will be talking to us. So tomorrow is fully packed. Tomorrow is fully packed. So please come prepared and come on time. I saw a lot of persons coming quite late, and coming at that time, you must have missed some knowledge, but you're on the safe side. We have a replay, so you can always check it out. Thank you, everyone, and do have an amazing day. Bye, guys.